Beyond Meat is having another shaky session today, and right now, it feels like we're watching a rubber band that's lost its tension. The stock has bounced around all day but hasn't shown the kind of energy that defined last week's run. At this point in the session, it's about 2:30 in the afternoon. Beyond Meat is trading down roughly 8%, sitting right around that $2 mark. It's been a back-and-forth kind of day. The stock tried to rally in the morning, pushed a little higher, then fell again, then bounced again, but each move seems weaker than the last. The problem isn't that traders aren't watching, it's that there just isn't enough fuel in the tank right now to launch another leg of the rally. So the big question today is simple: has the rubber band snapped, or is it just stretching back before it fires again? Let's unpack what's going on with the stock, why the move has lost momentum, and what to look for as we move toward the close and into the rest of the week. First, the setup hasn't disappeared, it's just cooling. Beyond Meat remains one of the most heavily shorted stocks in the market. Depending on which data you follow, short interest is somewhere between 60 and 100% of the available float. That means mechanically there's still plenty of fuel for volatility. If another wave of buying pressure comes in, shorts could still be forced to cover, driving another sharp move upward. But that's not what we're seeing today. Instead, we're seeing hesitation, and that's important. After last week's frenzy, the market is clearly in digestion mode. Traders have been taking profit, retail sentiment has cooled off, and volume has dropped sharply from those wild midweek sessions. For a stock that was trading hundreds of millions of shares per day during the squeeze, volume today looks downright quiet. When momentum cools like this, it doesn't necessarily mean the setup is gone, it just means we're in a waiting phase, what I like to call a tension reset. The rubber band analogy still fits perfectly here. Imagine last week's rally as the first stretch, that explosive moment when energy builds and releases violently upward. But after a move like that, the market needs to re-anchor. The band can't stretch infinitely without snapping. Right now, Beyond Meat is in that delicate middle zone, the period where we find out whether the band is going to reload or break. The bulls will argue that this is just consolidation, that after such a massive run from under $1 to nearly $8, a retracement down to the $2 range is natural. They'll say short interest remains sky high, retail traders are still watching, and the setup for another round is sitting there in plain sight. And to some extent, they're right, those ingredients haven't changed. But the bears have a valid case too. They'll tell you that this isn't consolidation, it's exhaustion. They'll point out that the stock has lost nearly 70% of its value since that midweek peak. They'll note that volume is fading, that social chatter has died down, and that without a new catalyst, there's nothing to drive buyers back in. Beyond Meat as a business is still struggling, it's losing money, it's issuing more shares, and it's facing weaker demand for plant-based products. For them, this whole move was just a short-term bubble that's now deflating. And the truth is, both sides have a point. We're in a classic moment of equilibrium, or indecision, where the market's next direction depends entirely on where the next burst of energy comes from. So, let's look at what's actually driving today's weakness. Number 1, lack of follow-through. Momentum traders have stepped back. After several days of violent price action, traders are waiting for confirmation before committing again. Without big volume, moves don't sustain, and that's exactly what we're seeing. The early morning bounce had no depth behind it, so it faded quickly. Number 2, absence of catalysts. There's no new company news today, no press release, no fresh social media trigger. When a squeeze play like this doesn't have new headlines, it relies purely on momentum, and that's always a temporary fuel source. Number 3, technical fatigue. After rebounding repeatedly last week, BYND has settled right around that psychological $2 level. That's now a key support zone. If it holds, it could become the base for a future rebound. But if it breaks, the rubber band may have truly snapped, and we could see another drift lower, possibly back toward $1.50 or even $1 again. Number 4, volume drop-off. This is one of the biggest tells. During last week's squeeze, Beyond Meat's volume was monstrous, hundreds of millions of shares traded daily. Now, midday Monday, the flow has slowed dramatically. That suggests traders are waiting for a clearer direction. Without volume, short squeezes can't ignite. So, what does all of this mean for traders heading into the close? The first takeaway is that this isn't necessarily bearish, it's transitional. Every major squeeze or momentum play goes through phases: acceleration, exhaustion, consolidation, and sometimes re-acceleration. What we're seeing today looks like the exhaustion to consolidation transition. It's messy, it's choppy, and it's uncomfortable, but it's also a normal part of the cycle. The second takeaway is that traders should be watching how the stock behaves around that $2 level. If we see it stabilize there and hold through the close, that's constructive. It means buyers are defending that area and that the setup might still be alive. But if it decisively breaks below 2 with strong volume, it would confirm that the rubber band has snapped, at least for now. The third takeaway is to stay alert for signs of renewed energy. Look for sudden spikes in call option activity, big prints in the tape, or surges in social media chatter. If those start reappearing, it could mean the band is winding up again. Let's talk a little about strategy. If you're still holding Beyond Meat from last week's rally, this is the time to manage risk, not chase more upside. The easy money phase of the trade, the wild parabolic breakout, is over. What remains now is the high-risk, low-clarity zone. Tighten your stops. Take partial profits if you haven't already. Let the chart show you whether this consolidation turns into a new leg or a collapse. If you're looking to enter fresh, patience is your friend. Don't try to predict the next breakout. Wait for confirmation. You'll know it's happening when you see price surge through $3.50 with volume. That's the trigger for a real move. Anything before that is just noise. And for those considering a short, remember, as tempting as it might look, heavily shorted names like BYND can still move violently against you. If another squeeze wave forms, it can wipe out short positions in a single session. That's what makes this play so fascinating. It's a battlefield where both sides are constantly at risk. Beyond Meat setup right now is all about tension, not direction. The short interest is still enormous, meaning the structure for volatility is alive. But without a spark, it will just sit there, compressing quietly until something gives. So, as we head into the final stretch of the day, here's what I'll be watching. Whether the $2 support holds into the close. Whether volume increases near the end of the session, often a sign of positioning ahead of a next-day move. Whether social sentiment picks back up, with new chatter about round 2 of the squeeze. And whether options flow shows signs of speculative call buying again. The key word here is patience. Don't confuse quiet with dead. Many squeezes lose steam for days before reawakening. Remember, every time shorts think it's safe to re-enter, they're reloading the rubber band. The market right now is waiting. It's watching to see which side breaks first, the buyers or the shorts. When that break happens, it will happen fast. So, to sum it all up, Beyond Meat is in a state of fragile balance. The fundamentals haven't improved, the sentiment has cooled, and the chart looks tired, but the setup is still alive. The rubber band hasn't necessarily snapped, but it's stretched thin. Heading into the afternoon and into Tuesday, keep your focus on the signals, not the noise. Watch the key levels, monitor the volume, and stay nimble. The next move, when it comes, will reveal whether this was just a pause before another push, or the end of this particular squeeze cycle. For now, Beyond Meat looks quiet on the surface. But as traders know, quiet can be deceptive. Sometimes, the biggest moves come right after everyone stops paying attention. So stay sharp, stay objective, and keep that rubber band image in mind, because when the next stretch begins, you'll want to see it before it snaps.